Mr. Sudip Bandyopadhyay to this conversation. Sir, I want to begin by asking, what do you make of this price action that we saw today? Does that indicate a reversal in the sentiment, or is it just a dead cat bounce?
Well, I don't think it's a dead cat bounce. I think the sentiment, under the surface was always positive. It was waiting for right triggers. Today, the market got few triggers. One is, I think, this entire excitement around Reliance. There are multiple things in the market. I'm not sure which one is true or which one is not. Incentive budget, forthcoming budget incentive on green energy, or the demerger of Jio, or the retail business. Something is happening definitely. The kind of move we have seen in Reliance definitely indicates some move in the offing. On the other hand, there was some brokerage reports on Adani Enterprises. That's again a large company with large market cap. There was some positive movement. We have seen movement in the oil and marketing companies, IOC, BPCL, good results by BPCL, IOC, ONGC. I think, generally there were a lot of positive excitement in the market today. Also, I believe that fundamentally nothing had changed in Indian markets. FIIs were selling, and at some point of time, like Friday, Thursday, when we went home, the FIIs net short position was more than a lakh contracts. And when FIIs are so short, it in a way indicates that there will be a turnaround, sharp turnaround soon. And that's what pretty much happened. That's what I believe.
And I want to spend some time on the Reliance industry. The stock had one of its best session in nearly 3 years. It has crossed the market cap of 19 lakh crore, in fact 19.6 lakh crore as the market closed. You said something about demerger of the telecommunications business as well as the retail business. Is that a buzz that's going around? Because we are not picking up anything of in that line of thought.
There is a buzz in the market, Suyash, definitely. In fact, if you look at some of parts, at different points of time, they have got investors in retail. I think the last round happened at $100 billion valuation. Whereas, Jio at multiple points of time at different valuations, marquee investors have come in. So if you look at the sum of parts valuation, I think you will get a much bigger figure than what it is quoting today. Of course, the traditional business also has been performing pretty well. Leave aside the petchem piece, which is globally, the petchem prices are depressed, so it is not doing well. But all the other segments of the traditional O2C business also is doing well. And of course, there is that entire green energy pack where there is a lot of excitement. There are some other green energy companies which are getting valued at a very, very heavy premium. So, Reliance with the commitment to invest 75,000 crores in the green energy segment. And I think the sum of part valuation definitely is much higher. So, there is definitely a demerger in the offing. Now, whether it will happen now or 6 months down the line, or a couple of years time, it's very difficult to predict. It will depend on a whole lot of other calculations, which I'm sure the company will do. But eventually, that is definitely going to happen.
All right, and it was not just Ambani group of companies. In fact, another Adani group of stocks also rallied today, and it was on the back of the foreign brokerage that claimed that India's path to self-reliance runs through Adani group of stock. Now, the same brokerage expects Adani Enterprises the shares to rally from about somewhere around 50% from Thursday's closing levels. And it has also mentioned, in its report that there is a lack of coverage on Adani group of stocks that is serving as a hindrance to investor education. Do you agree with that entire line of thought, and what's your overall opinion on the Adani stable of stocks?
Well, that there is a lack of brokerage coverage is definitely correct. And of course, that leads to, a lack of knowledge amongst the general investors about the Adani group of companies. This is absolutely correct, and this has been felt at multiple points of time. I think the only company which gets covered by many brokerages is Adani Ports. Of course, that's a very strong, solid company. I'm not counting Ambuja and ACC. They have historically been covered by pretty much all the brokerage houses, but rest of the companies don't get covered. So that is of course correct. As far as Adani Enterprise valuation is concerned, yes, if things go right and if the India continues to progress the way it is progressing, the airports business definitely deserves a look. and that's inside Adani Enterprises. At some point of time, that will get demerged and listed. You have the other miscellaneous energy, solar, wind, and whole lot of other things within Adani Enterprises. That again is a fit candidate for a probably a separate listing. And of course, there is this entire residual businesses. The entire model of Adani Enterprises is unique because they incubate businesses within Adani Enterprises and then they take it public. So it's a good structure as things stand today. And of course, if you look at it sum of parts valuation, I think Adani Enterprise probably deserves a better valuation. And the brokerage report, Cantor Fitzgerald report, points out to that. And now, overall, I think the valuation wise, a lot of the group companies are valued aggressively. So I won't like to get there. But Adani Port, yes, it's a good company, and long-term investors can always buy into that. Ambuja ACC, again, great companies. Investors can look at that. Now, the timing may or may not be right today, but at some point of time, these all become right stocks to get into because they're fundamentally strong companies.
All right, Adani group of companies look fundamentally strong, and Adani Enterprises, Ports, Ambuja, ACC are on are some of the stocks that you can add in your portfolio. That's a word coming in from Mr. Sudip Bandyopadhyay. Sir, thank you for joining us here on Lasik. Always a pleasure speaking to you.